Hello, everyone. Welcome back to the rationalinvestor.co's Crypto Live here. I love to do these little videos for YouTube every once in a while. Today's been just an incredibly busy day here in the market, and a couple of pretty big things have happened here recently, and so I thought I'd do a video for everybody on YouTube and Reddit and stuff. Our site, oh my God, Julian and Oscar and Sjord and everybody just working so well, and the site's working so nicely. You can see, Oscar's put this chat program for us together, and you can see how active I am because every time I do a tweet, a notice goes out to members. And I've been pretty active today. So, like I said, I thought I ought to take some time and just maybe review all the tweets that I've been doing. In fact, that's not a bad thing we'll do for this video. So we'll start off a day or two ago. I noticed, and it was interesting because one of our longtime site members actually, let's see if I can show it here. How does that work? I think you go tweets and replies. All right. So this will give you a blow by blow as my day developed here. It was interesting. I guess it was back here. So what is this? April 14th. So, about a week ago, eh? Let's see what we got here on the calendar. Well, 14th, a couple days ago. That's not really that big deal. I noticed some really interesting action going on in the currency land. And, for example, here, I had pointed out on this day that, hey, we got a really interesting, what we call a Hollywood Nick, after one of our longtime site members, Nick, who is out of Hollywood. That's why he gets that name. Anyway, he really loves this setup. And as you can see, it's a nice 2-to-1 risk reward on the Canadian dollar. And you had a whole bunch of lows to defend your stops here. So it's really interesting to see. And lo and behold, as the trade developed. At the same time, I thought this was really interesting. We had, this is actually, for people who do harmonics, this was actually a fairly well-defined what they call Gartley pattern. If your counter trend rally comes back to the 61.8, which was pretty close, this pullback here was a little deeper than what we would have really liked to see for Gartley, but nonetheless, the key is, do we get a fail here up at the 78.6? And you can see this really well-defined fractal that sort of came in here. And so, we had both the Canadian dollar setting up a long trade and this US dollar suggesting that maybe it was getting ready to top out. And, we say that currencies lead everything. So if we get a move in a currency like the US dollar index, it can have far-reaching implications. It was funny, and this is what I wanted to show you. Some people actually, and we have regular members that, retweet and favorite my tweets. And let's see if we can show that here. Let's show here. So Gravity, Tim, one of our site members, says Gartley is pointed out by the Rational Investor, and he actually did a nice little drawing of the Gartley pattern. And I replied back, shh, don't give away all our secrets. I was, of course, playing. But anyway, lots of fun. So the point of the matter here is, here we are today. And you can see how these trades have developed. I mean, they're startling, right? I mean, here's the Canadian dollar. There's that double bottom. There's the long entry. And the Canadian dollar is just going crazy today, right? And, this was sort of the focus of some of my tweets here today. I don't know why I closed that window. I'll put it back up here. D6, that's Canadian dollar futures contract, right? And then at the same time, we had this US dollar, right? Now, this is interesting. Something really came out of it that jumped out at me, and that is the Chinese GDP. I thought it was interesting to see that GDP growth is actually put in a fairly well-defined, what we call a market structure pattern here, right? This is head and shoulders. There's problems developing in the China story, and I'm wondering if the U.S. dollar, to a certain degree, is linked to the China story. As time goes on, what I found interesting, you saw that Chinese data, and boom, on the moment that it fired, like if you follow me, this is the benefit of being in this site, being a member, right? Is I basically talk about this stuff as it happens. So boom, the moment the US dollar index confirmed this as a fractal top here, basically that was a major warning sign to me. Fractal top confirms Gartley, right? And I even published it on TradingView. I don't know whether you guys watch TradingView or not, but basically as it happened, I just simply talked about how it moved just back to the 50% rule is more than a 3-to-1 risk reward. So technically speaking, if this trade fails and then another one sets up that's 3-to-1, you just keep following these 3-to-1s, you could actually have like three, because this is 3.32, if all of them happen to be 3.32, you could actually take 4 trades and the 4th trade would make you slightly profitable if it worked out, right? And that's an accuracy of 25%, or actually it would be less than, somewhere in there. I'm not shooting for that. CME floor boys, they want to be right 55% of the time. If you're right 50% of the time and your risk reward is 3-to-1, hopefully you can understand you're profitable, right? And that's what we want to do as traders. So to me, potential Gartley pattern, there's the fractal top, right? And, here we go. Big down candle here right now. I don't know where this is going to go. I've talked to you guys, and I don't know whether you remember or not. This is probably a good chart to look at. I'll move on to that later on. But when I started this program back last summer, right? Here's the summer of 2014. Notice anything similar here? This was what we called a bat pattern, right? Harmonic, bearish, right? There it is, bang, 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 bang. Very similar to what we're seeing on the US dollar index right now. And this was the end result, right? Kaboosh, right? So the fact, we'll get to this later on, but the fact that the US dollar is putting in this sort of harmonic-y type pattern up here, fantastic trade signal on the fractal top. I don't know where the heck this thing's going to go, but there's the 50% rule. And based on this setup, 4.06 risk reward, just risking 1 tick above old highs. So the trade's working pretty nicely now. You can see that we have a gap right here. We may come into this area and consolidate a bit. We got some key lows here. But the long and short of it here is we may actually be seeing the end of this just monstrous bull market. I mean, look how this has just been a monster bull, eh? If we look at it from sort of where the institutions would buy, if they were to buy, keep in mind institutions don't buy up markets. They'll probably look to maybe reload in this 85, 87 area. There's good old Mountain Man, right? There's OTE sweet spot. There's key highs, there's key lows, so you can tell there's going to be a battle in here regardless. And let's see, do we have previous? Oh, look at that. So there's an interesting key high there. In fact, that looks pretty important. Why don't we put that on the chart? Boosh right there. Lo and behold, that's right up against this area. So I wouldn't be surprised if this is the ultimate target. I, recommend to school members, set realistic targets, set things that, aren't too aggressive. I would say using this area as a target might be a little aggressive. I wouldn't be surprised, like I said, we're probably going to run into some traffic off of these old highs here. And we really don't even know if this trade is really going to perform or not. For me to really have good confidence in this, I'd like to see a counter trend rally. Right, maybe we fill this gap, counter trend rally, nice OTE fail, that would be perfect. So I don't know, maybe we bottom somewhere here, right? If we could get a nice OTE rally fail, right up in the original shorting location, right? That would be like right up in here. If the market could come down here, rally up here, fail, and then roll over, then I would be high confidence. Right now, the trade's just getting going. Gartleys have a bad habit of ending really nasty. So if this is a Gartley, look out, United States of America. Things could get pretty nasty for your currency. Couple other things, moving right along. Okay, so we talked lots about the US dollar. I think this is important, what's happening here in the world. And you don't necessarily need to be US dollar bearish, right? I mean, you can play the market that way, but there are, what's the anti, right, would be something like being long the Canadian dollar, right? And I was joking in our chat room a little while ago. I was like, oh man, I don't even want to look at the call options on the Canadian dollar. These options have probably just exploded. There is a lot of money to be made here, my friends, a lot of money, and probably still more. I mean, these 50% targets really aren't that unrealistic. And the interesting thing about the market is we really haven't seen, I mean, I guess we saw a big down flush there, but we really haven't seen like the historical volatility currencies can have. I mean, anybody who lived through the late 70s, early 80s and the British pound knows how crazy currencies can get. So maybe we're in for that bit of that fun in the US dollar now. That would be music to all the commodity bulls ears. And speaking of which, moving right along in our timeline here, I also was talking today about sort of what are other ways to play the US dollar breaking down. You could play the loonie going up, right? But here's another way to play the weaker US dollar anticipated, and that is owning gold, right? Gold's technically the anti-US dollar. So it's interesting to see if we look at the Philadelphia Gold and Silver Index, right? Here's our top, here's our bottom. 50% rule sure looks to be right around these old highs. And it was interesting, just this counter trend rally pullback, it was right into an OTE or optimal trade entry zone, what we like. You notice that there's some tails here on these candles, and we like to say tails like to be eaten, right? Which is basically what happened here. And you see that they brought the market right down into these old lows and then put in this little double bottom right here, right through the OTE zone. And now we're actually getting a little bit of a breakout. So, I really don't have a problem with people, considering what the US dollar is doing, considering that gold technically is the anti-US dollar. And recently here, I did actually quite a write-up on silver. And actually, I was looking at a whole bunch of different metals and the commitments to traders reports. I don't know whether you guys know what commitments to traders reports are. It's kind of tough to see on these screens, but you can always go to this. There's the chart. You could go to this write-up here, right? There it is there. Just hit that, make it mine, right? Go to the write-up and you can see it in person here. But basically, I did a write-up here on how silver, as just one proxy, we see that the commercials are heavily hedged against a price rise. And the institutions, and I don't know why TradingView decided to put the box there, but it was supposed to be over here. The large institutions are about 3-to-1 long silver right now. So the commitments of traders reports are telling us that smart money is heavily long, and that the commercial industry, the people that actually use the silver on a day-to-day basis, they are heavily hedged against a price rise. If a price rises, they're not going to be affected. So put the two together, and that's telling you, hey, maybe it's time to start taking a good look at silver again, right? And it's in a very interesting trade location, right? If this was a bull market, then this is the area that institutions are most likely to buy if they're going to buy. And you notice quite a bit of traffic in here, right up against these old highs. They've broken it down, and you can see how they're literally trying desperately to recapture this 78.6 we like to call the line in the sand. So you can see, and quite often what happens as markets dip below it, then rally back to it, then pull back, and then if we can get a double bottom through there, holy moly, that's one heck of a buy signal. So on this write-up, I specifically said keep your eye on 18 point, I think it's 500, isn't it? 505. Keep your eye on that level. There's that could be a really interesting trade setup there with the 3-to-1 risk reward ratio. And the insiders in the business are telling us that, hey, we're long and we're also hedged, so industry is not going to be affected if there is a price rise. So with all that said, right, gold and silver stocks, we often say that the companies that are involved in the industry, they're probably the best to know whether the commodity is going to go up or down. So seeing this bottoming type action here on the gold and silver, I don't think that should really be a big surprise. So today, I was commenting about, well, if you could play the XIU, or you could buy, I'm just speaking of different ways to play the US dollar breaking down here. You could play the Canadian dollar. You can play, gold and silver itself. And one interesting trade that popped up to me today was a gold ETF, right? This is an exchange traded fund in the States, RING, interesting name. Global Gold Miners, iShares, right? Here's their weekly chart. They've just gone through hell here, right? Nice double bottom here, nice confirmation of the double bottom, nice test of the lows held, and a cute little double bottom here that's being confirmed again, very similar to that XAU chart that we just saw a moment ago. And it was really interesting because I went and looked, and I was just curious. I just went and looked at what the options are here. You can buy in October 2015, which basically gives you about 6 months' time, a $9 call, right, which basically controls 100 shares of this ring from $9 for 45 cents right now. All right, so the full value of that option is 45 bucks. 45 bucks, what the hell? 45 bucks, that's not much money. So you go and buy that call, and if the market rallies back to the 38.2 and fills in this gap, no new bull market here, just nothing more than a dead cat bounce. Between now and the fall, this option will be worth $4. 45 cents to $4 just on a move back to 38.2. To me, even if you're right only 50% of the time with a almost 10-to-1 risk reward ratio, that's a trade I'll take every day of the week. And considering how depressed this is, considering we now have 3 key lows to defend our trade, to me, that's not such a bad idea, right? I think I even published it. I guess, maybe this is it. Let's see if it's gonna load. There it is, ring, one way to play a bounce in the metals. Right? So the irony of it all is that the optimal trade entry, or where institutions would most likely want to short, is up at 17 to 19 bucks, right up against these key lows. If you think about market structure, there's probably a lot of people that miss this trade on the way down. Remember, institutions cannot short down markets. They have to wait for an up market to sell into. So, we might actually still have a whole bunch of open orders that are just sitting, waiting to sell this thing up at $17, $18. If that happens before October, then our $9 call that we're buying at 45 cents is going to be worth the better part of 10 bucks. that's where trading just gets ridiculous, right? That would be almost a 20 bagger. So that's sort of what I wanted to bring to everybody's attention today. I've been, like I said, tweeting quite a bit. I think we actually have a historic development here in the currency markets. You just don't see this every day. This Canadian dollar, fantastic trade here. Just, beautiful market structure. This is what we call, the definition of Hollywood Nick, where basically the risk on playing this market structure is half the potential reward of it going back to a very natural retracement level, or what we call the 50% rule. That's thanks to good old William Dilbert Gann. All right, so let's finish off the video today with just a bit of Bitcoin, because I know you guys love the Bitcoin. A couple things that jumped out at me, and I thought, why don't we start off with the bigger picture? So I've got, oh, here we go. Here's Stamp. I got this right up here. Look at this. This is a really interesting story. And, keep in mind the backdrop of the US dollar, right? Hopefully we all have come to appreciate the fact that the US dollar is the market's fear proxy. So if the US dollar is going bananas, then that means that people are going to be avoiding anything that's sort of risky, right? And that has basically been the market backdrop for the past year. It's been just risk off. It's just that simple, right? And now we're finally getting some anecdotal evidence that, hey, maybe we're back into risk on. Phew. We've seen, like I said, the gold and silver are turning. The internals inside those markets are suggesting that they're turning. We haven't looked at crude today, but I've been talking lots and lots recently in the Twitter about how the oil stocks are leading the oil itself, right? And so one of my recent tweets back on the 13th, I said, did the biggest oil service company, Schlumberger, just confirm a bullish market structure bottom? So this was a while ago. I tweeted, just finishing off our thought about maybe the risk on assets are finally starting to turn, and here's oil. So you can see the W there to there to there, right? And it just broke out just above there. So there's a big W. That's what we call market structure, right? And if we just take a quick boo at Schlumberger, and I know I said I was going to do Bitcoin. Just bear with me here a second. I love doing these videos. They're so much fun. All right, so if we look at Schlumberger, right, oil service, who better to know what's going on in the underlying commodity than the companies that are involved in the business? And there's that market structure breakout we talked about, and this is what's happened since that breakout, chung chung, right? It's moving up, moving on up, right? So it looks good. If we look at the crude oil, just quickly, we basically see it's moving up, right? So not a surprise, right? Because Canadian dollar is so heavily commodity related, not a surprise to see Canadian dollar moving up. Long and short of all this, like we said, risk may be finally back on. So that brings us to the Bitcoin story. I look at the weekly chart, right? We should always start our analysis at the highest time frame. You notice that, this was off of the last bubble peak and its bottom. So for the purposes of this study, I started at the bottom of that move, and it was 45 bucks, right? Right down there. This whole bull market, right, up to a rally of 1163 in such a short period of time, right? Talk about going parabolic, right? The irony of all this, like we said before, is if an institution wanted to buy this market, they wanted to get in, they're not allowed to buy up markets. You just can't do that. I've talked at length with you guys. You can lose your job on an institutional order desk buying an up market like this. If they were going to buy, where would they most likely buy? The answer is what we like to call our OTE, or optimal trade entry zone. You see right now it's about 284 to 472, right? Well, I've denoted here higher time frame OTE. Now, what people don't understand is that this is a range trade setup. By definition, if you are going to play the OTE, then where do you have to risk to? And the answer is down to these lows, 100% of the move. So by buying anywhere in this box, they're basically saying, look, I'm going to risk against these lows, and my target is going to be a test of the old highs. And the irony of it all, you guys heard me say it before, Wicks and tails like to be eaten, right? Which scares me a little because we got this little tail down here. But anyway, wicks and tails like to be eaten. This is a really big wick. At some point in the future, I do believe Bitcoin will trade back up here and eat up these wicks. Can we go to new highs? That's tough to say at this point. But the point here is there's lots of fodder for institutionals to think that, yeah, we have a good shot at trading up here. So that's the trade location. What it does here before it gets up back up around $1,000 is meaningless. The only thing that will mean anything is if we break this 45 bucks to anybody who just trades OTE. We need to understand that. That's a really important concept of range trading. It doesn't mean that there will be a bottom in OTE. Doesn't say that at all. And one might argue that the market has actually given us a couple head fakes, right? I mean, we came down into here, rallied away, put in market structure top, and came back down. Right into OTE, they tried to put in a market structure bottom, right? And then that failed. Here we are. We like to call the 78.6 the line in the sand. Now you can see, this often sets up as an important level. You can see how it acted as a bottom here before, and then, when the market lost that last time, that was like, a better part of 300. We went to 160 or whatever very, very quickly, right? Within 2 weeks, bang, bang. Here we've rallied right back to the line in the sand again, on a sort of candle close basis. You can see the close and open. We're right off that level. And what we've done, interestingly enough, just here recently, is all we've done is just pulled right back into an OTE off of this range, right? That's what we're doing right here. So I've said here, Bitcoin looks to be offering a remarkable trader setup, right? Trader setup, you buy your OTE down in here and you risk to new lows. The numbers might be a bit ugly, right? 200 down to 150 or whatever. And, that's going to be, I guess, about 25% of the capital, right? But having said that, considering what the higher time frame OTE is and how this is really trying to set up, if we recapture this 78.6, that makes me feel very, very good that Bitcoin has finally turned the corner here. It's too early to get really bullish here, but I do believe range traders are actually being given a trade setup here. And when we look down on the lower time frames, right, let's look at the 240, for example. This is off OKCoin. All right, so there's that entire range. And for quite a long time now, I've basically said, I just simply think Bitcoin's in a trading range. Here is that OTE zone, right? And you can see how price just quickly dipped into it and ratcheted away. If we look at some other charts off like lower time frames, we actually see and really we talk about this at length in the course, but natural extension targets, I like to use 161.8 to 200%. 161.8 is a magic fib number, right? And look how it just bounced off that, doink, and put in a bottom. I think at present right now, maybe we have dead cat bounce going on. We have a nice little Elliott wave pattern, which takes us back up into a higher time frame 38.2 level. As well, off of just this recent range, it's an OTE short zone. So I think we got a nice little bounce going on here, which is cute. Here is that higher time frame OTE zone that we talked about. And really, I want to see some nice market structure come in here. We've got the beginnings. And, like I said, when we look at, I guess that 4 hour is probably best. Is that there? Yeah, here. All right, when we look at this off a little higher time frame, this is a 4 hour now, we can see that this is like a V bottom, right? V. Ideally, what we want to see, very much like we saw here, is we want to see the full M's, right? That's bearish, beg your pardon, we don't want to see M's. Let's give it bullish scenario, right? There's a W, right? What we really want to see is WE price action, right? So we've got the first part of the W. I'd like to see the rally. We know we have a couple key levels here. In fact, if we look at the 1 week futures, you can really see it in spades here. So there's that fib OTE level that we talked about. Volume profile, this is actually the POC, which is interesting. All this move down here was just fluff, right? I mean, the smart money had their positions here. Looks to me like they just wanted to wash out and see if they could run some stops in here. We have this little Elliott wave working our way back up. There's Mountain Man's level. Mountain is really interested in taking a 61.8, and he'll do it just on a first blush. We have horizontal support and resistance right here, which also happen to line up with Mountain's level. And there's a volume profile. You can see that Mountain Man's level is a notch, or what we like to say in Oscar's honor, muak muak, right? Kiss kiss, and use your imagination what we're talking about there. Typical male, right? Anyway, the point of the matter here is this dead cat bounce. We're starting to run into traffic area. Really shouldn't surprise us what we've seen here. And on balance, what I'd really like to see is come back down, test the lows, give us a W, and then away we go. Right? Look at, and even our internal algos, they're starting to look really attractive now. Look how, when we end up here, look how the algos were very toppy, right? Now the algos are looking very bottomy. So I think, you know, things are looking encouraging. What's really interesting is we might even get like a parallel of this. I've conjectured with a few site members. We've been playing around with this tool a little bit lately, where you just literally take this price action from here to here, let's say, right? And you just bring it over to here and then flip it around, right? And look at the symmetry this would do. Look how symmetrical that would be. And interestingly enough, that is a fractal pattern. It's very advanced. I haven't seen it really talk too much, and I find it really hard to find resources about it on the internet. But I am continuing to look. So this is kind of what I wouldn't be surprised to see. You know, like we have the smatterings of a bottom, but I can't really buy until we start getting WE action. At the same point, you know, we are into a higher time frame OTE. We have very interesting action going on in the currencies, and like we say, the currencies lead everything. We've got anecdotal evidence across other commodities that markets are starting to look interesting. You know, like I said, that ring ETF, good example where, you know, we've got interesting trade location in here. And if we actually do start to turn the corner here in earnest, man, this thing's got a long way to go to come back. So. All right, why don't I leave the video at that for today? I think I covered everything. Oh, last thing I want to talk about, I've been really working with GAN angles recently. Big shout out to Crazy C for sort of bringing me back on board. I stopped using GAN, but really some really interesting information here lately we've gleaned. This is a daily off a stamp, and you notice that, you know, we've been playing with these GAN lines in particular. The 8-to-1 are where we actually really like to take a trade setup. On stamps daily, you can see here's OTE off of that previous range. 8-to-1 and OTE are lining up really nicely here. So like I said, I don't even know. If we look at our forecast, we actually could see new lows here, right? So I'm not saying, hey, this is it, we're starting to go. I need to start seeing W's and stop making lower lows. It may still take a little bit more work. I think in the short term, we've got the 13 EMA brushing up right against this GAN line, right, which is also this low and this low. I think we're going to have a bit of a traffic in there. We could come back down, and like I said, ideally, we'd love to see a trade set up off of 161, OTE, and 8-to-1 on the GAN lines. That would be just awesome, right? And that would also make Hogue happy because it would be below value low here. So I'm kind of looking for a bit of traffic right up here near the POC, right? 13 EMA, this GAN line, old lows, right? And really, I don't have a bottom yet, right? All I got is a V, and I can't start turning super bullish until I start seeing the W's come in. Okay, let's leave the video at that for now. So really interesting market, lots of fun stuff, and I'm kind of feeling like maybe fee be abating, and we might actually have a risk on market again, which would be a lot of fun because we haven't had a bull market and risk on for quite some time. All right, guys, have yourselves a great day. All the best. Anybody who's watching this video, probably last thing I should mention, we do have the upcoming Q2 school program starting. I have 4 seats left, so we still have 2 weeks till registration. If you do have any interest in the school, by all means, you can PM me or whatever, get a hold of me on Twitter, and I can give you the course curriculum so you can see what you're getting into. But the long and short of it here is for those 4 seats over the next 2 weeks are going to go pretty quick. And if you are interested in the program, you can see last program, we're kind of coming up right to the end now. If you are interested in this program, and they're 12 weeks in duration, you better get in contact with me sooner rather than later, or you're going to miss the window. So, all right, everybody have a great day. All the best. We'll talk to you later, and good luck in your trading. Bye for now.